Bitcoin is stumbling again as December begins. Just a month ago, it peaked at around $126,200. Now it's trading at about $85,461, representing a 32% drop. It's fascinating how quickly things can shift in the crypto world, isn't it? Let's explore how we got here and what's happening in the market. Right now, the overall market sentiment has taken a turn toward risk aversion, creating a cloud of uncertainty. In finance, a risk-off mood means investors are hesitant, pulling back from volatile assets like Bitcoin and tech stocks. This time of year has historically been good for Bitcoin, often with December seeing price rallies. However, this year feels different. The bears are clearly in control. The Crypto Fear and Greed Index is showing extreme fear, which reflects a widespread anxiety among investors. This fear can create a snowball effect. Prices drop, confidence wavers, and more selling ensues. There's also a critical issue with liquidity playing a role in Bitcoin's decline. After a significant liquidation event last month, many investors pulled out massive amounts of capital from cryptocurrency funds. In November alone, about $3.5 billion left Bitcoin funds. With liquidity drying up, the market has become much more vulnerable. Picture this like a swimming pool when the water level is high, making big splashes is easy and doesn't disturb the water much. But as liquidity decreases, that pool starts to feel shallow, making even small trades send prices spiraling. Less liquidity means more price volatility, and it's creating an uneasy atmosphere. The broader economic context adds another layer to this story. Recently, news from the Bank of Japan hinted at possible interest rate hikes. When news like this circulates, it creates ripple effects across global markets. Investors wary of economic shifts often pull back, leading to even more cautious behavior toward riskier assets like Bitcoin. This uncertainty can create a tense environment, especially when the macroeconomic landscape feels precarious. A shift in a pivotal economy can set off alarm bells and prompt investors to rethink their strategies. Adding to Bitcoin's woes, corporate holders are also in the spotlight. One notable entity is Strategy, renowned for being one of the largest corporate buyers of Bitcoin. Recently, there were hints that if their valuation fell below a certain level, they might begin selling some of their Bitcoin. Picturing this creates a sense of anxiety in the market. If such a major player were to start selling, it could trigger panic among investors. The mere possibility of a large sell-off can weigh heavily on the market, with fears that it would further depress prices. Looking ahead, the future feels uncertain. Speculation about potential interest rate cuts from the Federal Reserve is swirling, but without clear indications, many are sitting on the sidelines, waiting to see how things play out. Bitcoin has faced challenges before, and while the landscape is tough right now, it might find a way to bounce back. A shift in sentiment or clarity in the economic outlook could change everything. In the end, it's a tumultuous time for Bitcoin, facing a confluence of factors: risk aversion, liquidity concerns, macroeconomic pressures, and corporate selling fears. The market remains dynamic and ever-changing, and while the current vibe is uncertain, history shows that Bitcoin has the potential to recover. As we move through December, it will be interesting to watch how these narratives evolve and what the future holds for Bitcoin.